Inner Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax. And to our viewers at home, are you often asking yourself what some proper tax planning strategies would be, especially if you're one of the high net worth clients that Phil and his team help? We're going to talk about that today and the benefits of tax planning overall. Phil, how are you today?
I am absolutely wonderful, and it's good to be back on the set with you, Cynthia.
It's so good to be with you, Phil. Thank you so much. I missed you and just excited about today's show because we're going to talk about someone that you have talked to me about for years, Ed Slott. Talk a little bit about who that is.
Oh gosh, Ed Slott. Well, for those of you who do not know Ed Slott is known as America's IRA expert. Now, one of the things that we're going to, and actually he's one of my mentors. I started 18 years ago with Ed Slott, learning about tax-efficient retirement income planning. And we went through a lot of different variables on why it's important to pay taxes today and retire tax-free forever. Simple. So the question is, and today we're going to talk about this, I don't want to say ad nauseum, but I'm going to say we're going to do a deeper dive, okay? So what I wanted to do, because many of our folks from Central Texas never heard of Ed Slott. He's been on dozens and dozens of PBS specials. He's known as America's IRA expert. Okay. He trains CPAs and advisors like myself on how to help their clients reach the zero tax bracket in retirement. He was I'm going to call him the grandfather of tax planning. And I just made that up, okay?
I love that.
And so in order to be an Ed Slott advisor and even an Ed Slott aficionado, it's important to know as an advisor, Ed Slott and Company, they require you to recertify your credentials and your knowledge twice a year.
Wow, okay.
So it's not one of these, there are so many different groups of initials. I see some of these advisors, and there are a lot of good advisors, and there are a lot of good credentials, but some of them you pay a fee and, you take a test once and, you're certified this or certified that. With Ed Slott, it's continuing education each and every month. So when you contact us, we'll sign you up for our newsletter, which comes out each and every week, which helps you understand different tax laws that are changing, any changes that would affect taxation of your retirement accounts, but especially how to become more tax efficient. So for those of you who call in or hit the QR code, when you come in for your retirement income plan, tax efficient retirement income plan, we are going to gift you a copy of Ed Slott's latest book. And this is one of over a couple dozen books. It's The Retirement Savings Time Bomb Ticks Louder. If you're home, Google it, it'll come up. I am a firm proponent of Ed Slott and the information and education that we get. And I'd like each and every one of you residents that have retirement accounts to be as well informed as possible. So let's get the book.
Let's do that. I don't want to interrupt you, but what I'm understanding, Phil, is that topic right there, the retirement savings time bomb ticks louder. He's referring to people that have been putting money into tax-deferred accounts, whatever vehicle that may be, such as the 401k. Why is that coming to light right now?
Well, let's face it, with this new administration and with the onset of DOGE, look, I don't care whether you're a Democrat, Republican, doesn't matter to me, okay? There has been so much government waste, and it's not government waste, it's taxpayer funding waste, okay? So we hire bureaucrats to, it looks like, tie a knot with special interest groups to give them giveaways while we get the debt. So with the debt rapidly approaching $37 trillion, 22 cents of every single dollar in taxes that come in today as we film this show goes just to paying the interest on the debt.
Okay.
It's sickening. It's despicable. And for some
That's
of
how
the
passionate we are.
Thank you, Ed. Thank you, Ed.
Exactly.
And the fact of the matter is we need to get a handle on it, or our grandchildren and our children are going to be burdened with it. So again, whether you like them or you don't, fact of the matter is we do need to get a handle on these tax dollars.
Absolutely.
You've worked decades and decades. I've worked
Absolutely.
over 50.
Yeah.
I've been paying taxes for all of them. I have 5 children who are also taxpayers. So with that being said, it's important to do tax planning now. So what we're going to talk about, and what I wanted to kick well, first of all, we'll do that in the next segment.
Okay.
First of all, what I want to advise all of the viewers out there and all of their children and grandchildren, be smart, be wise, okay? Pay taxes once. Repeat after me. I only want to pay taxes once. So how do we accomplish that objective, folks? How do we accomplish the objective of only paying taxes once? When we save for retirement, put your money into a Roth 401k or a Roth IRA. So today we're going to do a deeper dive on why it's so important to do that. I'm not talking about Roth conversions. I'm not talking about taking money from your 401k or IRA and moving. I'm talking about right out of the gate, out of every check, place that money, pay the tax on the seed and not on the crop.
Makes
and we're going to
sense.
talk about how important that is, because if you want to be, let me put it this way, another way, if you do not want to be responsible for paying off the debt of irresponsible spending, do yourself and your family a favor, pay the taxes once. And we're going to talk about why it's so important to do that. I'm going to kick off just one. Number one would be tax-free growth. So let's assume my 25-year-old starts to put, and they have, or all of my children have, and many of our viewers' children have as well if they've been watching our show. You want to not worry about the deduction today.
Okay.
Today we know the tax rate.
Absolutely.
The tax rate for tomorrow is uncertain. We know in the past taxes have gone up over 70%, just federal taxes. Could that happen again? Yeah, it's likely that it can and will.
Sure.
Because it's 22
Because of the
cents
debt.
going to every dollar, right?
Absolutely.
So the first thing is you want to pay the tax first and allow that money to grow tax-free for decades. So for a 20-year-old, a 25, 30, 35-year-old, if you're paying into a retirement plan that says, I trust the government is here to help me, I know taxes will never go up in the future, I'm going to save a penny now, chances are you're going to find millions of dollars are going to be taxed later. So the very first thing is pay the taxes now. Our wonderful administration back in 2010, they opened a door for us. They opened a door for us to do not only Roth conversions, but to now do Roth contributions into this 401k. So with that being said, if you contribute to a government taxable retirement account and allow that to grow for decades and decades and decades, then when the day comes when you retire, or at least 59 and a half, beyond a time where you get a penalty for taking early withdrawals, we don't know what the taxes are going to be. So the idea is if you pay the tax now on the contribution, let it grow tax-free, you don't have to worry about it. So that's number one. That's number one.
Well, we have to take our first commercial break, Phil. I'm sorry to interrupt you. I want to keep going on this topic because it is so incredibly important. To our viewers at home, there is a number to call on your screen. That number is 888-818-6557. If you're in the viewing audience today and you're asking yourself, do I have any idea what my future tax implications could be? If the answer is no or you're unsure, you can actually visit empowertaxbill.com. Once again, that's empowertaxbill.com. It's a website where you will take some time, put in some information. It's your name, your address, a lot of information about your income and what tax bracket that you're in and where you currently stand with your taxes. You're going to receive a report that comes to you via email, and you can take a look at what your obligation would be today or perhaps when you make those changes. Once again, completely complimentary. Just call in to 888-818-6557 to schedule a one-on-one consultation. Or if you prefer to be online, please go to empowertaxbill.com. We think you'll be very surprised about what you see. If you're rushing out the door, don't have a pen handy, you can always grab your smartphone, click on that QR code at the bottom corner of your screen. That will take you right to the landing page for Empower Wealth and Tax. We're going to take a very short commercial break. This is a very important show talking all about proper tax planning so that you can reduce your obligations. Take care.
Hello, my name is Philip Capriotti. If you've already filed for Social Security and would like us to fast track you straight to a licensed fiduciary to create your tax-efficient retirement income plan, we'll be happy to accommodate you. You know, one of the most important priorities to ensure that you do not become tax poor in retirement is to, number one, structure a tax-efficient retirement income plan, as well as a comprehensive Morningstar report. This will ensure that you understand three major variables. Number one, how much risk are you taking? Number two, how much return are you receiving? And number three, how much are your internal and external fees? To fast track your meeting with one of our licensed and experienced team members, just click on the link below, complete the form attached so we can provide you with an accurate and detailed plan. Let's start empowering your retirement right now.
Welcome back to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax, and we're talking all about that today, taxes. This show, if you're concerned about them, it's just for you. Phil, this is a great topic, and we were talking during a commercial break about something that happened recently. Let's talk about what that is and why it's important.
So folks, it's all about saving money, whether it's taxes or what have you. So I got to give a shout out to Bowtown out in Kingsland, and I think they have two offices. And again, I don't normally do this, but I felt compelled to do this. The manager there, Austin, and along with the owners, Karen, I believe, Clifton, I bought a boat, a Barletta, actually, about 5 years ago. And it had a 5-year warranty. And you know how these warranties go. Well, at the end of the 5 years, my interior started to crack from the sun.
Wow.
So I brought it in and I asked them, hey, I get a 5-year warranty. I know we're right on the edge here. What are you going to do with this? And I'm figuring it's going to cost me thousands to replace this interior. Well, this company, this shop, they took my boat in. They contacted Barletta. They came back to me. They took the entire interior out of the boat, sent it back to Barletta, and put all brand new interior in the boat and charged me $0.
Wow.
Now, I have never had any type of, I've had great warranties before, but I got to tell you, folks, and again, I don't sell these boats, but I'm going to tell you one thing. These folks are great. And when you talk about being an individual of your word, this is really, I think, the definition of a fiduciary. Well, they act in a fiduciary capacity.
Yes, doing the right thing.
Getting back to saving money, and we're going to get back into the taxes. Okay, thanks a lot, folks. I appreciate that. Why do we want to put money? Why do we want to start it off by paying the taxes first? Well, the government's given us this excellent opportunity. If you pay the taxes once, you can let it grow tax-free, and then you can take tax-free withdrawals out at any time after you're 59 and a half with no penalty. So one of the benefits here is not only can I put it in and let it grow for decades tax-free, but then I can take all withdrawals out tax-free. At any time, I can take them out. My spouse can take them out if I'm married, and my children, when they inherit it, they can take it out. So if you want to reduce your tax liability and not be on the hook or obligated for this god-awful debt that we're experiencing, the Roth 401k contribution and the Roth IRA contribution is a must.
Okay.
Where did I learn all about this? Well, again, a couple decades ago, Ed Slott and Company. Okay.
Yep, absolutely.
And for all of you Ed Slott aficionados out there, I just wanted to make a mention. Let me just set that down so I don't drop it again. I just wanted to make a mention. It seems like every time there's a new tax bill, okay, we have a new way of circumventing paying excessive taxes. And again, I love being the Ed Slott advisor. It's extremely important, folks, if you're out there, work with a tax efficient advisor. If your advisor is not helping you save money on taxes, or not talking about saving money on taxes, or telling you not to worry about paying taxes, you might want to consider a second opinion. One of the other benefits of this is it avoids RMDs.
Okay, which is excellent. I love that. So you can actually take the money out without paying a penalty, paying taxes on that money.
Yeah, and you're not forced to take it out.
Amazing.
So if you've amassed other assets, okay, and let's say you're doing the whole maximizing Social Security and all of this, you may have dividends and interest you want to take out. You may want this tax-free retirement account to be generational, tax-free transfer of wealth. So by not requiring you to take a mandatory distribution, which is one of the rules of a Roth 401k and a Roth IRA, there's no age limit. You don't have to worry about taking mandatory distributions. Now, for those of you who are familiar with RMDs, if you were born before 1960, your first RMD age is 73. And if you're born after 1960, your first RMD age is at age 75.
Okay.
So allowing this money to continue to grow, and also to be able to, it actually allows you distributions from these accounts, allows you the freedom of not paying taxes on your Social Security benefits. We'll get into that later on.
That's incredible.
Yeah, so when we look at, I only pay tax once.
Right.
When I put it in.
On the seed.
That's it.
Versus the harvest. On the known rate versus the unknown.
Exactly. Let that thing grow as long as I want and keep on paying those taxes once. Let this beautiful retirement account blossom into a tax-free, literally generational wealth transfer. Okay, you're not forced to take distributions at any specific age, like with a traditional 401k and IRA. And not only that, when you take distributions from your Roth 401k and IRA after you filed for Social Security, it causes your Social Security not to be taxable.
That is incredible.
So when we start to really look at all of the different variables, I can't see the reason not to start right out of the gate doing Roth contributions in your 401k, 403bs, your 457s, and your IRAs. One of the other things I hear folks say, I can't do a Roth 401k. Say this a lot when they come into the office, and I say, why? I know your company offers it. About 98% of all companies offer it. They don't advertise it, but they offer it. Why? Well, I make too much money. I said, what do you mean you make too much money? Well, you know, if you make over a certain amount, I understand if you make over $225,000, you can't put money into a Roth. And I was like, who told you that?
Interesting.
You see, the Roth 401k has no income limit, folks. Now, the Roth IRA does, but don't conflate or confuse the two.
Okay.
If you're making $500,000, $1 million, you pick the number, the government has lifted the income limit off of your ability to make Roth 401k, Roth 457, Roth 403b contributions.
Okay.
There is no income limit.
That's interesting, Phil. So I have to ask you a question. Is that basically for people who work for corporations? What about people that are self-employed entrepreneurs? What happens with that option? Do they start a different Roth account? Your thoughts on that?
Well, that's a very good question. I'm glad that you asked that. So for folks that are self-employed, we have a little thing called the SEP.
Okay.
The SEP IRA. And let me tell you a little something about the SEP IRA, and that's a simplified employee pension. That's what the acronym for SEP is. We just use the back door.
Okay.
Doesn't every home have a back door?
It does. And thankfully, those didn't go away because that was kind of on the table for a while, right?
Right. So what I advise folks to do is You are allowed to contribute up to 25% of your net if you are self-employed and qualified for a SEP IRA.
Okay.
So how do you handle it? How do you get it into the Roth? You make the contribution. Oh, and by the way, that limit this year in 2025 goes up to, you could put up to $70,000 a year in.
Wow. That's awesome.
So you can make the $70,000 contribution if you have the net income to allow you to do that.
Okay.
And then convert it over to a Roth IRA.
That's brilliant.
It's simple. It's so simple.
It's so
simply
brilliant.
using your mind and using the laws that allow us to do this. So I make the contribution to the SEP. Yes, I get a tax deduction, but then I convert it over to the Roth. Then I pay the taxes on it once, and I allow it to continue to grow.
Brilliant.
No income limit. No income limit. So we have a lot of different things. Cash balance plans, which we can convert. Simple IRAs, which we can convert. So there's more than one way to skin a cat, or as I like to say, there's more than only one way to pay tax on the seed and not on the crop, with all of the wonderful laws our government has allowed us to pursue. How do we learn about all these things? Well, number one, you click the QR code and you come in and talk to an Ed Slott IRA professional. And by the way, not all advisors are not created equal. It's kind of funny. I look at some of the Ed Slott advisors from 10 years ago. They're still working in Austin, but they're no longer Ed Slott advisors. And the reason is, and I've noticed some of the new ones. So I have been an Ed Slott advisor for 18 years. This is my 18th year. So one of the things is many folks will start to become an Ed Slott advisor and they'll do it for a year, 2, 3 years, 4 years, and then they get tired of it. They get tired of recertifying. They get tired of paying the fee for the continuing education. They lose, in my professional opinion, their priorities to stay current with tax-free retirement income planning.
Phil, thank you so much. To our viewers at home, we have to take a very short commercial break. But if you're leaning in and you're saying, oh my gosh, I've never heard information like this before about tax planning, and you'd like to schedule that consultation, call into 888-818-6557. Schedule your time accordingly with Phil and the team. He's going to explain some things to you about proper tax planning and how that benefits you overall. Doesn't it make sense to pay tax on the seed versus the harvest? We think so. Once again, 888-818-6557, or you can grab your smartphone, click on that QR code at the bottom corner of your screen, and you can schedule your time accordingly. Again, we have to take a very short commercial break. We'll be back momentarily on Retire Smart Austin. Stay tuned.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks took a major hit.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the 4th worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. I'm Philip Capriotti, CEO of Empower Wealth and Tax. If you amassed a nest egg, it's time for a financial advisor to help you reach your retirement goals. This is one of the greatest tax windows in history. Now is the time to take advantage of this tax discount while we can. We specialize in retirement income planning, tax mitigation, estate planning, and so much more. So plan your retirement right. Call now for your own complimentary portfolio review and tax analysis.
Welcome back to Retire Smart Austin. My name is Cynthia DeFazio, joined today by Phil Capriotti Sr. of Empower Wealth and Tax, and we're talking all about the importance of proper tax planning on today's show. Phil, you've been so passionate for years about tax planning, but there's specific reasons behind that. We're going to talk about just a couple because we don't have a lot of time to get into that.
I teach a couple classes, specifically one for CPAs and accountants on why they need to recommend to their clients to consider a Roth 401k. It's not just the taxes now. We have to look at when we take distributions from our Roth in retirement, there are no taxes on Social Security. Now, I understand that the current administration wants to do a no tax on Social Security and so forth, which is the way Social Security was originally designed.
Exactly.
But folks, really don't get all excited about it because any future administration can change that. take matters into your own hand.
Yes.
And taking distributions from the Roth will always allow you, especially with the provisional income rule, allow you not to pay taxes on Social Security. Pardon me. Also, you don't have to worry about future tax uncertainty. Taxes can go up at any rate.
That's true.
And they said, well, they can always change that. I hate to break it to you, folks. Every single one of your elected officials, okay, let me put it this way. Over 97% of our elected officials own a Roth. There's a reason they pass these bills, and there's a reason they own them, because it's an intelligent thing to do. And again, it helps alleviate our responsibility for irresponsible spending.
Absolutely.
Things we can't control. The other thing is it avoids your Medicare surcharges.
Wow. Okay.
So I have clients that are extremely wealthy. They've worked hard.
Absolutely.
They've saved hard. They've raised their families, and they don't want to be gobbled up in taxes in retirement. They don't want their retirement savings to be gobbled up in taxes. So one of the things that we have to be concerned with is Part B and Part D IRMA taxes. So when you take money out of these retirement accounts, 401ks, IRAs, if you go above the limit, which isn't very high, it's only about $191,000 now.
Okay.
Up to 85% of your Social Security can be taxed, plus your Part B premium for Medicare and Part D drug premiums will go up. They will go up from the standard premium of about $185 a month. They can go up as high as over $750 a month.
Wow. Okay.
Why? Because I didn't save in a Roth.
Wow.
Why? Because my CPA didn't mention that to me. Why? My CPA probably wasn't thinking about it. How about my financial advisor? Were they thinking about it? I don't know. Is your financial advisor thinking about it? I know we are. So there are a lot of sidebar benefits of contributing to that Roth 401k, Roth 403b, Roth 57, Roth IRA, even if you have to come in through the back door to do it. Also, how about simply having control over your own retirement income?
Absolutely. That's so important. You've worked so hard to get there.
Yeah, exactly. So we have folks that are pulling $70,000, $75,000, $80,000 a year from Social Security because they paid the max in. And so they claim their right benefit. They'll pull another 50, 60, 100 from their Roth, some of the earnings, and they're in the 0% tax bracket.
Phil, we need part 2.
Part 2 next week, folks. We're going to finish it up for you.
Thank you so much.
Thanks,
to our
Cynthia.
viewers at home, most specifically, thank you for spending time with us today. That number to call is 888-818-6557, or visit empowertaxbill.com, empowertaxbill.com to find your tax obligations. Be safe, be happy, be blessed. We'll see you back 1 week from today. Take care now.